The graph at the time of this recording is now fighting resistance between the 0.0928 and the 0.1179. And on today's update video, I will be discussing the scenarios that can play out if by any chance we manage to break above this key area of resistance. And above all, also take a look at the daily chart, giving you reasons why we can easily see a massive movement to the upside, hitting the 0.175 mark in the next coming days. So make sure that you stick around till the end of the video. And starting the video here on the 4-hour chart, for those of you that have been watching my videos for the past few days, you know that I was watching these 5-wave structure to the downside from the highs we made above the 0.1314, where you can see that we have now completed that 5-wave structure to the lower side in a move that gave us a low below the 0.0693. And having made that significant low, I was expecting a bit of a bounce to the upper side in what can either be a 5-wave structure to the upside, alternatively that can turn out to be an ABC corrective structure. And in that movement to the upside, I was able to identify a key area of resistance that is going to differentiate which of the two scenarios are playing out here on the GRT chart. Which of the two scenarios is playing out here on the GRT chart? And to come up with that key area of resistance, I connected the Fibonacci's from the highs we made in the formation of that first wave to the low of that wave 5. And the area of interest was between the fib level 0.78 and the fib level 0.382, and that is between the 0.1179 and the 0.0929, which is the yellow target area over here. And you can see that we have seen a bounce into that target area. And the first case scenario that we need to expect over here is that the graph can easily break out of this key area of resistance to the upper side. And the moment that plays out, then that will be a clear indication that this is not an ABC corrective structure. It's now a 5-wave structure, having that as a first wave, a pullback in a wave 2, a wave 3 over here, and these over here could be a pullback in the formation of that wave 4 before we can continue pushing even higher in the formation of that wave 5 to the upper side. And if that plays out and we get a break out of the yellow target area to the upside, then that will be a clear indication that we are going to continue seeing higher prices, and that will also fully support an negative structure that I have here on the daily chart, where you can see that from the lows we made on the 7th of April, I have been terming that initial bounce as the formation of that first wave. Then we saw a pullback in the formation of that second wave into the minimum target areas, an area that we fully maximized, and that area is now giving us a reaction to the upside in what I believe is the start of an impulsive bounce in the formation of these wave 3, whose minimum target areas can be given by connecting the fib extension from the low of the first wave to the high of that first wave, then connecting the Fibonacci's to the low of the second wave. And on so doing, the area that I will pay attention to lies on the fib level 1.618, and that lies above the 0.1738 as my next target area. And once that target area is hit, then we should expect a pullback in the formation of that wave 4, and then continue pushing even higher in the formation of that wave 5 that can easily give us a break above the 0.2 mark in the next coming days. So that is the first case scenario that I expect here on the graph chart in the next coming hours. Alternatively, in case we get rejected within these 4-hour key area of resistance and we continue seeing further pullbacks here on the charts, then it is most likely that this bounce over here is just an ABC corrective bounce. And if that is the case, then using the Fibonacci's, connecting the Fibonacci's from the lows we made in the formation of that wave A to the highs we made above the 0.1207, we should be able to identify a minimum pullback target area, and that is between the fib level 0.5 and the 7.8, and that lies between the 0.095 and the 0.08 mark, which is that blue target area. So in case we get rejected and continue seeing further weakness on the charts, that is the area within which we should find support, and then attempt another bounce back to the upper side in the next coming days. And that will still be in support of what I have here on the daily chart. It's just that we are going to get a bit of a deeper retracement before we can start another reversal in the next coming days. So that is all that I expect here on the GRT chart, on the short term and also on the long term. And let us be patient and see how that plays out, and I will ensure you stay up to date.